Okay, so on the channel, you might have seen me trade with multiple different accounts. So in today's video, I'm going to talk about the main reasons behind why I trade different accounts, why I trade accounts with different risk and different confluences. And I'm going to make it simple, and it's going to be chapters so you can flick through to see each account that you might only want to be interested in a higher risk account or my low risk account. So you can flick through and find whichever account you want to see. So we're going to start with one that most people probably want to know about, which is my high risk account. This is one that I've actually started over the past 2 months, and the trading progress has been very, very good. I will overlay the profits so far in percentage. We've made around 12%, here or there 12% over the past 2 months already, and that is only from around 2 to 3 weeks of trading. The main reason why I started a high risk account is because I want to have an account where I can risk 3-4% per trade and just grow it and see how I can grow it. I've always traded with separate accounts where I can risk more, where I can take trades that don't have perfect confluences. So the trades that I take on this account won't be exactly the same as I take on my other accounts. And this is because I know those strategies work, but on my low risk accounts, the long-term trades, I'm kind of forgetting about all these setups. Let's say, for example, I have 5 confluences for a normal setup, and then on this high risk account, I'm only taking trades that have 3 confluences or 4 confluences, but I know they still work long term from my data. Obviously, if I'm building a track record long term with low risk, I'm wanting to have the least amount of drawdown possible. So I'm only going to take the best possible setups on this account. But I also want an account where I take every setup, whether it's 4 confluences, 3 confluences, and even if there's 5, I can still take the trades. So I basically wanted to take all the setups that are presented that fit the plan, fit everything, but just not quite perfect and not quite good enough to take on my main, long-term account. And this strategy is profitable so far. We've got around a 55% win rate, and the wins are bigger than the losses, so that means the strategy is profitable. If your wins are bigger than your losses, even if it's just slightly, and you have a 50% win rate, you're making money. It might not be loads, but it's fine. And on this account so far, all my losses have been around 3%. I've had multiple winners of 10%, some like 4%, 1%, obviously depends on the market conditions. But this account, again, is solely trading GU. Majority of my trades, solely GU. All my data, GU. Obviously my swing data is different, but we'll go into that slightly later. And in this account, it's not like I'm putting in tens of thousands, hundreds of thousands of pounds, trying to flip it overnight. That's not the goal of this account. I'm risking 3% or up to 3-4% on this account because I know that out of 10 trades, based on my win rate, I'm going to lose 4 or 5 trades. So my worst case scenario in drawdown could be around 15-20% drawdown. I'm comfortable trading in 15% drawdown. I know a lot of people might not be comfortable trading that, but then I also know that one win is 9-10% profit. So it might seem like a lot in drawdown terms, but actually based on the wins and the loss size, it doesn't really matter too much. And I'm always looking to make the most of my capital. I'm not going to put everything I have into a high risk account because I feel like that would be quite stupid, and you can lose massive amounts of your overall capital in a very short period of time if you do hit a fairly long losing streak. But I'm comfortable putting a set amount of my money into an account with higher risk to actually do this. Again, it's just like investing into an individual stock or investing into a crypto that you believe in. I'm doing the exact same, but I know that my skills are most likely going to make money long term, whereas a crypto, you have no clue. You have no control over what's going to happen. You have no control over what's going to happen with a certain stock. Whereas with this account, anything that happens to the P&L is based on my decisions. Everything's based on my trading. So I feel comfortable knowing that the money's on the line, yes, but I control what happens to it. Obviously, I can't control the markets. I can't say if price is going to go up or down, but I can control the decisions I make based off of what I'm seeing in the markets, which is the most important part. So we're going to move on to the account number 2, which is my long-term swing account. And you might have seen on the channel, I've talked about this over the last 8 months. And over the past 8 months, we've hit around 14% profit. Some people watching would be like, oh, that's terrible. He's hardly making any money. But then you also need to think the S&P 500, which is considered the greatest investment for anyone to make, averages around 7-8% a year. So 14% in 8 months, I'm pretty happy with. that averages around 20-25% a year, it's going to be pretty good strategy. If you can do that over 4 years, 5 years, 100, 125%. Imagine every 4 years your money doubles, your net worth doubles. Obviously, I don't have everything into this account, but hypothetically speaking, the money in the account will double every 4 years. That's what you need to think about. And the main focus on this account is to risk very small, max risk 1% per trade. And the goal is to make 1 to 2% per month. If I make more, great. Currently, the average month is just over 2%. We've had one losing month, which was 0.89%. Again, keeping the risk super small. The worst month I've had so far, I haven't even lost more than 1%. That is the main focus of this account, is to show long-term, consistent growth. If you're going to pitch an investor and your P&L was up, down, no consistency whatsoever, they're less likely to invest in your strategy. Whereas if you have a nice equity curve that's slowly going up, 1-2% per month that's consistently growing, people are more likely going to invest. So that is the aim for this account. I'm obviously going to grow it with my own capital. That is obviously the main goal too. Turn my money into more money. If I can do that consistently long term, whilst also trading with high risk accounts, investing into index funds, investing into whatever else. But if I know that I can make consistent growth with this swing strategy, I'm going to keep trading it. And like I said, the percentage gains might seem small, but let's say you're trading multi-7 figures. Let's go, for example, £1 million in the account. If you're making 25% a year, it's only just over 2% per month, but that's £250,000 from 2% per month. If you're trading with 10 million, that's 2.5 million a year with 2% per month. Now the percentage starts seeming like it's a lot of profit when you factor in how much money you're making. If you're trading with £1,000 account, 25% is only £250. You can't live off £250 in a year. Granted, I know this. I traded £1,000 accounts back in the day. That was my biggest account size at one point. And I was also frustrated knowing that, I have to make 10-20% a trade to actually make any decent profits. But once you realize that where you're at now, compared to 5 years or 10 years, trading's a long-term game. You don't need to get to 7 figures. You don't need to get to 6 figures this year. Because if you try and rush it, you most likely will lose. So that's the main focus for this account, is to grow it long-term. So in 5 years, 10 years, 20 years, hopefully it is multi-7 figures. So that if I make 2% in a month, that's tens of thousands of pounds, if not hundreds of thousands of pounds. And that's what we should all aspire to be like. Small risk, large capital, and you can trade stress-free. And then moving on to the last type of account that I do, and this is a flip account. And people love seeing flip account videos, and I'm actually going to put on the screen here a flip I did recently, which was 20 or 25 pounds to over 200 pounds. So I made around 185 pounds profit, something like that. And this was in a couple of hours. I did it because I haven't done a flip in a while. The market conditions were perfect. If you're going to do a flip, obviously I'd say that it's a bad idea to do a flip at any point in trading time, because you have more use of spending your time collecting data, refining your strategy, journaling. Basically anything is better than flipping accounts. But if you are going to do it in perfect market conditions. Don't risk loads of capital or a high percentage of your account if the conditions aren't perfect, just because you want to trade, just because you want to flip. It makes no sense. I only do it if I see perfect market conditions. I'll put 25 quid into an account. To me, 25 pounds, come on, let's be realistic. It's not going to change my life in any way if I lose that 25 pounds. That's why I do it, because I can trade with pretty much no emotion, because I don't care about the outcome. I just trade what I see. I trade what the market's telling me without being attached to any positions. If I lose 50% of the account, I've lost 12 pounds. 12 pounds. That's not the end of the world. Whereas if I'm trading a 100k account and I make a mistake and lose 10%, I've lost 10 grand. That's quite a lot of money to anyone. 10 grand. Even if you're a millionaire, 10 grand is quite a lot of money. It's 1% of your net worth if you're a millionaire. 25 pounds, I flip it. And the reason I do this, I don't do it often. You probably see on the channel, I've done it quite a few times over the past 4 or 5 years. But the thing about it is people post their flips acting like it's happening every single time. I've blown flip accounts. I've made profit on flip accounts. I've made big profit on some flip accounts. You know, my first ever flip was, I think it was £450 to £2,000. So that first flip I ever did, I made £1,500 in a day. I've done other ones like 10 to 340, which is my first video on the channel. I think 4 years ago or something. But you have to be okay with losing the account. If you're going to do a flip and you're putting your life savings in there, you're putting money you need, then it's going to end up bad no matter what happens. Because let's say you even make money from the flip, you're then going to be like, oh, well, I made money from it when I just did it. So next week, we're going to be like, oh, I made money, so I'm going to do it again. I'm going to double the account again. But then you'll most likely lose. If you're risking that high percentage of your account, the likelihood of you losing is very, very high. It only takes 2 losses, 3 losses, and the account's down to 0. If you lose 50% of an account, you need to make 100% to make that 50% back, which is what people don't understand. Especially with leverage, it's hard to make back the profits or the losses once you are down a lot on your account. So my advice to you guys watching, not financial advice obviously, but what I would do if I was a new trader, focus on an account to just slow consistent growth. Even if you're doing this consistently, a couple of percent per month, you'll be able to pass prop firms, you'll be able to make money on your personal account, and you'll see the wonders of compound interest. That's what we all want, an account that slowly grows long term into something large. If you have additional income, deposit it. If you have a winning strategy, obviously, and you are trading profitably, there's no point adding money to a strategy that doesn't work because it will just make your losses bigger and bigger. But if you are profitable, grow your account and you'll see the profits grow and grow too.